Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, we discuss everything about stock markets, the way they have opened in trade today, and what kind of triggers will impact the direction of stock markets all through the day today. Remember that 5 days of consecutive gains is what we have seen, and today again, defying the SGX Nifty trends, the stock markets have opened higher, the Nifty above 16,900 mark as well, and there is a continuous momentum, beat the benchmarks, beat the Nifty Bank or the broader market indices. There's a broad based rally that we are able to see right from the word go in today's trading action. And this is despite the kind of losses you have seen overnight on the Wall Street and mixed cues coming in from Asia as well. So the big trigger that is really helping the stock markets inch higher today is on the back of the easing of the crude oil prices clearly, and the oil prices in fact slipped quite sharply in yesterday's and overnight trading session, with Brent crude now trading around $100 a barrel as well, and $105 a barrel as well. This is the kind of range that it is trading at, and this is somehow fueling in some positive sentiments on the street as well. Now let's look at first how the stock markets have opened in today's trading session. The Sensex opened higher by 223 points or 0.4% up at 56,709. The Nifty was up by 52 points or 0.3% up at 16,924. About 1459 shares have advanced in the early action, whereas 439 shares have declined. About 64 shares remain unchanged in the initial trading action, indicating that the stock markets are and the market breadth is clearly favoring the advances at this point in time. Let's talk about some of the stocks that are in action right now. Asian Paints, Mahindra and Mahindra, Cipla, Tata Consumer Products, and Maruti. These are among the top major Nifty 50 gainers at the moment. On the losing side, you do have stocks that are dealing with, upstream crude oil prices, because the fall in prices are indicating some kind of a pressure on their margins. Like ONGC is down in trade. Metals like Hindalco and Tata Steel, JSW Steel, all of them are dragging at the moment, and SBI Life Insurance is also down in trade along with Reliance Industries, that is seeing some kind of pressure coming through. Now, apart from this, when you talk about the broader market indices, they are outperforming the larger markets at this point in time, with the mid caps adding about 0.4% in trade, the small cap also gaining by 0.6%. Now, remember, 15 of the 19 sectoral indices compiled by the Bombay Stock Exchange are seen advancing at this point in time, with the realty index gaining about 1%. And on the flip side, you have metals that have shed about 2% right in the early trade. The market breadth clearly in favor of the bulls, about just like how I talked to you, that most of the advances at this point in time, whereas very less declines at this point in time as well. Of course, this is amid the moderation in crude oil prices and the two-day meeting that of US Federal Reserve that has kick-started today, and we will get to know on Wednesday night as to what kind of indication do we have on the interest rate front as well. Now, when we talk about some of the other developments across the globe on the Russia-Ukraine geopolitical development front, the war has entered day 20. Russian and Ukraine delegations held their fourth round of negotiations via a video call. The Financial Times has reported that these talks have left a fragile path to diplomacy, which is still on the table, indicating some hopes as well, still right there. Brent crude corrected over 8%, just like how I told you. And on the other hand, we do have indications coming in from domestically on the inflation data front as well. CPI or retail inflation data came in higher at an 8 month high of over 6.07%. That is a bit of a concern for the Indian policymakers, especially the monetary policymakers at this point in time as well. Now, apart from this, we do have several stocks that are in focus today. For example, starting off with Reliance Industries, the subsidiary Reliance New Energy has acquired the assets of Lithium Works BV, which is a lithium battery maker. The company has acquired the assets at $61 million, and this clearly indicates the company is clearly focused on expanding its new energy, renewable energy space as well. including the focus on electric vehicles as well. RITES, as a company, is in focus today. The company has declared a third interim dividend of 7.5 rupees per share. So keep that stock in mind. That stock may be showing some kind of an uptick today. Wipro is also in focus. The IT services company has bagged a contract from Spira, um, and that is which has operations in both Germany and in Norway. So that's going to be in focus too. Anupam Rasayan is in focus, as the firm has said that their chief financial officer Afzal Malkani has resigned from the position. Now, brokerage houses also have some stocks on their radar. Nomura, for example, has a buy call on Tech Mahindra. It expects the M&A to be a key growth driver going forward from here. Jefferies has come out with a report on the power majors, Power Grid and NTPC, believes that these are not impacted by the higher coal prices. Also, Jefferies has lowered the estimates of the IT stocks for FY 23-24. EPS estimates have been reduced by 3 odd percent. Infosys and Tech Mahindra definitely remains Jeffrey's top picks given the strong growth outlook as of now. Morgan Stanley has come out with a report on the real estate sector. It believes the pre-sales and the new launches for Q4 are the highest in last 5 to 6 odd years, and the recovery in real estate sector is becoming even more entrenched. They are overweight on DLF, Prestige, and Sobha Limited. Now, Credit Suisse has also come out with a report on the credit revival of banks. It believes that credit revival may be delayed, and it has cut banks' earnings by 4 to 9 odd percent on account of lower growth, and Treasury hit and cut earnings on select NBFCs by 7 to 12 odd percent on lower growth, higher funding, and credit costs as well. So this may actually have some more negative pressure on the banking stocks as well as of now. Overall speaking, the markets have started on a strong note. We will need to see whether the momentum really continues. Most of the experts are saying that the bulls have actually come back on the street, and we may see the momentum continuing since there is nothing outwardly negative really coming in. Whether it is from the war front or from crude oil prices front, which has eased now, which was a major cause of a worry, and the decline in stock markets last few days when we had seen very sharp declines coming through. So that behind now, all eyes will be on the US Federal Reserve, the indications coming in from there, and the markets will definitely take direction after Wednesday from those kind of impact as well. Of course, inflation is a concern, but right now most of the experts believe that the RBI will not jump into taking an action right now, and will be waiting and watching the situation as of now as to how everything progresses. For now, for traders, still caution needs to be warranted at this point, because volatility cannot be ruled out in an uncertain environment that we are going through right now. And on the other hand, long-term investors are advised to keep an eye out on good fundamental names, and whenever there are dips, you can definitely add on to your portfolio at this point in time as well, because the market breadth fairly remains positive at this point in time. I'll keep you posted with everything that's buzzing on the street, and what kind of direction will the street really take. What will be the impact on your investments in stocks and sectors that you have an exposure to? And for that, you need to stay tuned on to Business Today. Don't forget to subscribe to our YouTube channel. And in case you found this video informative, give a thumbs up and like this video as well. Thanks a lot for tuning in. For now.